Sorry, guys, just distracted a minute with a little conversation. But, ladies and gentlemen, the crypto space, we're live at 11:36 a.m. on a Friday, February 19th. Today, like every other day, there's an endless onslaught of information, excitement, progress, innovation, evolution, and craziness, and we're going to dig into what's going on. Obviously, you guys know I tweet all the ideas that come to my mind, trying to express the vision I see and the path that is more than less likely to play out into the future. I see a sequence of events. I see causality, cause and effect. I see, excuse me, the macro landscape, how the legacy financial system will deal with these systems that are emergent and nascent. I see how government and regulations will want to try and apply rules and controls, and in many regards they will and should. And there's very interesting ways that the projects that are dominating the space will respond and may not even need to respond depending on how they are structured with regard to their corporate relationships, with regard to their business definition, how they've structured themselves as a legal enterprise. And some of them are literally open source and completely decentralized. Uniswap is one of the most decentralized products ever to come out of the crypto space. It is almost arguably unregulatable. Obviously, the corporate entity, if there is one, can be regulated, persons can be targeted, but the software is deployed. Did you know that Uniswap v1 is still online? The original? I'm just saying, it will exist forever. It's nothing can be done about it. And that is a tantalizing technological reality that we all must begin to understand, process, and envision how the heck this is going to play out. Today's topic is crypto risk off compared to the legacy finance risk off. Okay, I kind of wrote that like 2 seconds before I started the stream, so I at least I got it grammatically correct. Today's episode is sponsored by Change Angel, the non custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Oh, we're looking up some stuff over there. I'll get you back over to Twitter. We got Heirloom in the house. Risk off in real estate. Live in Florida, not Texas. Oh my God, Texas with the freeze. I mean, Florida, it's like 80 degrees out right now. We got our issues too, man. We got the hurricanes and we got politics and everyone's there's issues everywhere at this point, and frankly, the financial system and disparity and social order and it's getting pretty rough. And I don't see a lot of stability. I see a lot of instability on the horizon. Igor's in the house. Always a pleasure. Noah, look what you did to Ren. Yeah, I've seen Ren. I mean, Ren might be. You guys can only imagine, man. Ren is crazy. Captain Weber, does the Rook story change with all the gasless projects launching? No, I wouldn't argue so. I would argue that Rook and Keeper DAO, unless someone comes along and specifically mentions technology such as attacking the dark forest, that's the competition. What you need is proactive smart contract technology that captures MEV. So there's a little bit of stuff going on, but Keeper DAO is the predominant, the forefront. They have launched, they are deployed, they have their contracts, they're functional, they actually work, and it's an MVP. So it's very exciting. The problem is only one thing, and let's pull it up. The problem is it's a relatively low liquidity asset, and I've told everyone it's a risk on asset. And risk on assets are volatile, especially considering the low liquidity. It's on FTX, but it's not on the other exchanges, which means the other exchanges don't have um, their own inventory of the asset, and that this significantly affects the volatility of the asset. Um, my recommendation, as I always say, is altcoins and risk on assets generally should be a small part of the portfolio. Excess application of value extends significant risk. I myself have extended significant risk. I mentioned that Rook at one point was my largest risk on bet I ever made. Currently, it is consistent with my risk on positioning as defined in the way I handle my portfolio balance. Small portions of the portfolio only. You have to respect the portfolio, and the portfolio will respect you. Um, it does. The story hasn't changed. Fundamentals tell you where to look. Technicals tell you when, and the technicals right here are under pressure. It's sitting under the 200 EMA on the 4 hour. I mean, look. Long term, it looks decent. Long term, it looks like it's in a channel. You see the channel, parallel channel. I mean, it's more or less a channel, but you see that here's the problem. Kind of broke to the downside down here. I don't know, something like this. Maybe it's in a rising wedge. So don't apply excess value to risk on positions. I preach that to high heavens on Twitter, and I maybe need to remind everyone more on the stream. Um, Fundamentals tell you where to look. Technicals tell you when. The vast majority of value applied to risk-off assets. Protect to the downside. Capitalize on volatility. You got to protect to the downside. This is exactly an example of downside, and without having a strategic plan in place for how to protect it, that means there's risk, and the most and that's money right there. This is the most important thing I'll ever teach anyone. The big boys don't make money gambling; they make money by protecting the downside. Risk management, risk adjusted returns. And that is where they apply value. And that's how they grow $1 billion into 1.25, into 1.5. And that's how the big boys do the money. Risk adjusted returns. So don't gamble, guys. Come on, you guys worked too hard in 2020 for this capital. And I know a lot of you folks were in on Rook in pennies. What the heck is it at? What was it? Igor mentioned Rook. Ren 142. Igor, I just looked at the Ren price. Speechless. Crazy. Heirlooms in the house. Well, you were in the house, but I saw your second tweet. Bidders in the house. Always a pleasure. Captain Weber. I mentioned Rook. Patterns. Heirloom. Patterns. Christopher. BNB. Let's take a look at BNB. Because that is obviously the stuff that's going on. BNB. Yeah, guys, this is a blow off top. This is a period of irrational exuberance. The participants on Binance Smart Chain are retail. You guys are not retail at this point. If you guys have been listening to me and implementing strategic portfolio strategy, you're not retail. Retail buys something, hopes it goes up, has no idea what to do when it goes down. And this is exactly what happens when they have no idea what to do when it goes down. It's exactly what happens with Doge. A 10% drop, and everyone's like, I'm going to lose my money. And then another 10%. More people say, I'm going to lose my money. Then another 10%, another 10%. And before you know it, this chart looks exactly like this. It went up, and look, this is exactly what happens. Look at that. You see this? Come on, that's crazy. This is exactly what happens when you buy something, hope it goes up, and have no plan, no risk management strategy for when it goes down. And that's what I try and teach you guys. It has nothing to do with the asset going up. Stop looking at the price appreciation. Focus on fundamentals. Get in at a good technical position and think constantly about what happens when it goes down. Are you protected to the downside? And I've talked about liquidity pools, and that double-sided liquidity pool is exactly the staple of my portfolio at this point, because it has downside protection functionality. It caps upside, and that's exactly what I want. If Bitcoin or Ethereum go up 1,000%, I'm not going to get those gains. If I have one Bitcoin and it goes to $1 million, I will not have $1 million, because it's right now pooled with other stuff. So I will have less Bitcoin and more of the other stuff. And that's exactly what I want. I want minimized upside. I want to minimize volatility. I want less Bitcoin and more Ethereum. And then Ethereum goes up, and then I have more Bitcoin and less Ethereum. And it goes like this. And as the liquidity floods into the crypto space, this is what happens. Let me make sure you guys could see my hands. Okay. You're down here, up, 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 up. So it goes back and forth. Yeah, more Ethereum, more Bitcoin, more Ethereum, more Bitcoin. But the whole thing is rising. And that's the point. And that's exactly and the whole time that that's happening, you're extracting transaction fees and you're extracting liquidity incentives. So you're capitalizing on volatility. And to the downside, it works the same way. If there's a massive dip in Bitcoin, you're going to have more Bitcoin in the pool. You'll have more Bitcoin in the pool, which means it went down in price, but now you have more of it. So it compensates the total value that's in the pool, minimizing volatility, minimizing the downside price action. And that's everything. Otherwise, you end up in hopium land where you buy something, you hope it goes up, and now you're just a bag holder going down, 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 hope it goes up, and now you're disappointed again where it bleeds out, retracing back to the 200 EMA in the 4 hour. Don't do it. Don't do it, guys. You need a downside plan. You can't just hold stuff in a portfolio and hope it goes up. I don't mean that in a bad way. This is just you, you have one shot at this, guys. That's the most important thing I can tell you. We have one shot to kill it financially, and the opportunity started in May of last year, went to September. It was risk off in September, and then January, and it's almost the end of February, and it has been on. And that's why we look at the macros. What we do is we look at the dollar, we look at the long end of the curve, the short end of the curve, we look at news headlines, Fed policy to understand if there's a story change, if there's any indication that the party will stop. And that gives us time horizon to get a sense, can we be comfortable or do we have to think about increasing our downside protection, maybe take out an options contract on Ethereum to the downside, buy a put. So if Ethereum is at 2,000 and you buy a put for 1,900 and Ethereum goes to $1,200, you could sell your Ethereum for $1,900, even though it's worth $1,200. And that is exactly what a put does. And Oppian does exactly that. Oppian does exactly that. They don't have a lot of liquidity, but here, Bitcoin, it'll cost you 2,135. But if Bitcoin drops to 20 grand, you could sell your Bitcoin for $44,000. And that is what this premium protects you. And that's everything. And this is the only way to do it in the legacy financial land is options. And that's why I'm not too much of a fan of options in the crypto space because I think the liquidity pools, the double-sided liquidity pools, have a much more effective means of achieving risk off. And I've anecdotally seen, observed, witnessed liquidity flowing into liquidity pools during minor risk off events, and then the liquidity flows out. So they're treating it like bonds. And that's just extraordinary because that's what they do in the legacy financial system. And that's the title of the stream, Crypto Risk Off compared to Legacy Financial Risk Off. In the legacy financial system, during systemic events, liquidity floats to bonds. In the crypto space, you no longer have to exit to dollars to get to bonds. In the crypto space, all you have to do is flood a liquidity pool and you're able to achieve a relative risk off position. Thank you, honey. Thank you. See you. My gorgeous daughter. All right, so let me keep up with the stream. Let me get to everyone's ideas. Ronan's in the house. Always a pleasure. Tao, new here. Welcome. Please stay a while and ask any questions you may have. I'm happy to help to the best of my abilities. Squanchy got me on the train. Yes. John McGuire's in the house. Thawing out here in Texas. I'm not a fan of the cold. I used to live in New York. No, 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 no. I'm going to keep my Self in Florida. I'm just saying. Do you think Rook will pull a Ren? I think that fundamentally it is probably one of the most exciting, tantalizing projects. I think Bancor, when this proposal launches, is going to be an extraordinary catalyst, and I think that'll get it out of its funk that it's in, because this is going to create a very meaningful demand to purchase the asset from the market. Here, Rook. So if anyone wants to see Rook go up in price, you need to vote on this proposal. And only 20 people have voted on this proposal. So this will drive demand for Rook, and it's not manipulation. This will increase the price of Rook. If this proposal launches, Rook go up. That's the way the system works. Seriously. Um, Crypto chick in the house. I did a hiding trade on Rook. When do you get the rewards? Go to the pool tab and you'll see them. Go to the pool tab and you'll see rewards down here. That you get. I'm pretty sure you get if there's rewards. There's not always rewards. Rewards are only available if the bots were able to arbitrage a profit, and that's the point. Here in Run and Go Balls Deep on Rook, and so did I. Care, risk on, downside. I don't know. I just spit out 3 words to you guys. The whole point is don't go too far into risk on. You work too hard. Will BNB go to 500? BNB looks like Doge right now. BNB. BNB is like, I mean, this thing's coming down, guys. This thing's going to come. I'll tell you where this thing's coming to. You go to moving averages for targets. So you're probably through. Okay, you pass the one. When this thing's probably going to hover between the 100 SMA and the 200 SMA for the 200 EMA for a while. Maybe hit the 50 SMA. But there's significant downward pressure. This thing had a blow off top. That's going to affect the psychology of the market participants. If this thing breaks to the downside through these long-term EMAs, one by one, it's just a cascade. So what's the longest one? All right, fine. Maybe a 30-minute mean regression because it's still going down here, and you're just about to have a bearish signal cross on the MACD, and RSI is still relatively high and on the downswing. Let's take a look at the 15-min real quick. All right, so 15-min, we can see some buoyancy right about now. So that is what this chart indicates, but it already broke down. Look, it's bearish on the MACD. So I would probably have, me personally, I would have eyes on the 30-min. Let me take a look at the 1 hour real quick. I mean, you can see bearishness here as well. I mean, look here, it broke horizontal line. So it did not hold resistance flip support. Now, next up, I mean, next up is this bad boy. Listen, if this thing breaks there, GTFO. If that breaks, I mean, this is pretty, this is, you could probably even throw a target right around there as well. If this thing breaks one of if it breaks this second purple line, it already broke this top line. Let me take that out. If it breaks this purple line here, trimming your damn position, trimming it 10%, 20%, 30%, cutting losses. I mean, look at the Stoke. Look at the RSI. It's a downswing. You're about to have a MACD bearish signal cross. This thing is bearish, and it already broke a previous resistance that did not hold as support. A resistance that does not flip support is a bearish technical indicator. So if this thing pushes through this top purple line, expect the bottom line to get hit. If this thing hits the bottom purple line, you know where you're going? You're probably going somewhere around here. And that's where you're going to get hard with a 30, 40, 50, 60% loss of value. All right, that's enough BNB talk. I'm not picking on BNB. I just don't. It is obvious that the prevailing market participants trigger a retail depreciative cascade. They're not equipped to handle a 10% depreciative cycle. It's just the case. That's exactly what's going to play out in the broad equities markets with NASDAQ and so on and so forth. All right. I'm still retail, Christopher. No, you're not, because you're listening to me. And you're going to make changes and you're going to do better. You're going to think about downside. You're going to take less risk. You're going to hold more macro assets and less risk on assets. More risk off, less risk on. You don't want, here's the antithesis. Don't forget this, guys. You don't want to make as much money as possible. You need to be contrarian. What you want to do is make good money. You don't want to chase the millions, because if you do, you're going to be full risk on and you're going to end up back with a portfolio the way it looked in 2019. So don't do what everyone else does. Don't chase the dragon. Rook will pull a Ren, in my opinion. Squanchy, I like it. I have my Rook position. Right now, my position size is good. It could do what it wants. It could go down. It could go up. And this is exactly what I had with Ren back in August, September of last year. It's a good position size, and I let it go down. You know what? The very bottom of when Ren did its post-summer collapse, I was still up from my entry point. And also combined with the fact that the position size was solid and the fundamental story didn't change, dictated that there was no reason to make any portfolio modifications. So while the story has not changed for Rook, the fundamentals are completely unchanged. It has slowed technically. It is under a little bit of bearish pressure. It doesn't have the bullish feel, albeit Bancor in this proposal will be a big bullish catalyst. So that is quite meaningful. And depending on your risk appetite, how much money you're willing to gamble, maybe you excessively applied value to the position. My recommendation, as I always say, financial advice, less risk. Take less risk. Protect your gains. Risk off. How about that? Financial advice. That's because these stupid kids on YouTube and whatever the hell they're doing on YouTube, then their prefaces, they're telling you what to buy. They say, buy this, buy that, Bitcoin to $1 million, these idiots. No, talk about how people can make good decisions, strategy, ideology, logic, and reason. And that's what I do. And that's the type of advice people need, not what to buy and when to buy it. Most ridiculous stuff I see on YouTube. It's horrible. Don't do what anyone else tells you to do. You have to come to the realization by yourself. And if you don't, then don't do it. And then pursue the investigation, the logic and reason necessary to come to a decision for yourself. And that is how you grow, and that is how you learn, and that is how you become able to effectively, proficiently, and intelligently manage your wealth. Not invest, not make $1 million and have no idea whatsoever to do with it. You need to know how to manage it by yourself. You can't let anyone else tell you what to do. And that's not the way it's maintainable or sustainable. Anyway, this is an interesting stream today. Hope it's helpful. Would Ren BTC LP be a smart play? A double, so I just gave you guys an example earlier about a Bitcoin, Ethereum double-sided pool. So if Bitcoin is whatever the heck it is, and it goes to $500,000, and it's paired with Ethereum, the pool, that means people are, if people are buying Bitcoin, there's going to be less Bitcoin in the pool, which means you have less of those $500,000 coins and more of Ethereum, which may be worth less or worth more. And that is how pools work. But along the ride, you're getting interest, you're getting incentive, you're getting downside protection, because if Bitcoin falls in price, you're going to have more Bitcoin in the pool. So it's going to compensate. So the liquidity pool gives you balance. It reduces volatility. And as I've said, if I have a 50 grand Bitcoin and it goes to $500,000, I will sacrifice upside any day, any second, if I can minimize potential losses and downside, while also the extraordinary reality that in these LP positions, you're also capitalizing on the volatility. You're getting interest and yield, and that's extraordinary. That changes everything. And the point of the title of the stream, where's my control? The title of the stream is Crypto Risk Off versus Legacy Finance Risk Off. In Legacy Finance, when there's a systemic event, and I talk to you guys about technicals quite macro financial uh, technicals quite often. When there's a liquidity event in the legacy financial system, you'll see the bonds, the yields crash, and that means people are buying bonds. So they flood the bond market as their safe haven. I've seen that exact same behavior in the crypto space. When there's any red, even a little bit of red, the liquidity floods the pools. So this time it's very different in the crypto space. This is not 2017, 2018, boys and girls. The value no longer needs to leave the crypto space. We have the infrastructure necessary to maintain an effective risk off position without exiting the crypto space. And that means liquidity will flow in. It won't need to flow out, which means it's trapped. Not trapped, it's contained. And that means it's accumulating and more liquidity comes in. And guess what? The pool. It might go up and down. You might miss out on 100 grand on Bitcoin, but watch what happens as the liquidity flows into the space. And that is how you grow wealth sustainably, by taking less risk. You don't want the big $10 million win. That's how you lose it all. My man Ronan wants yachts. That's right. Craig's in the house. Always a pleasure. Oh my God, you guys are talking some. I can't even keep up with the chat anymore. I'm gonna have to figure out what the heck to do. I'm going to try and read through it as quick as I can. I'm going to take some time today, give you guys some more time. It's 12:05, but you guys got a lot of commentary. I appreciate it. I love it. Squanchy, do I have to buy BNT to vote? Yes, you need BNT to put into a VBNT to stake it, and then you could vote. Yes, indeed. But that is a path for Rook to experience a significant demand, which will disrupt supply, which will trigger a significant appreciative force. So you can do the hiding game trade, then after the epoch ends, you'll get the reward. It might be after the epoch. That's an excellent point. DXY looks like a head and shoulders. Let's take a look at the DXY. Damn, this is crazy. Oh, that is actually an excellent observation. Who pointed that out? Igor pointed that out. Hey, Igor. Not bad. Would you look at that? So there's much more to macro financials than just a dollar, but damn, man. That is a good eye. Wow. How do you like that? Well, that's bullish for assets. That's bullish for the crypto space. That's bullish for the stock market. That also means the equities market is going to get stupider. Can it get any stupider? Well, if the dollar breaks down, it sure is going to get pretty damn stupid. Let's take a look at 30-year bonds. Oh, 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 all right. Okay, let's take a look at 2-year bonds. USO2. All right, this thing is trending horizontal. So I speculate that banks are front running stimulus. They need a huge amount of treasuries or short end, short end of the curve bonds in order to account for deposits, because that's how they pay interest and all that stupid process that traditional banks do. Oh, I don't even have the damn screen up. Okay, 2-year bonds. So 2-year bonds are horizontal. They're distorted because banks are front-running stimulus. Let me show you guys the chart. Sorry, I'm sorry. U.S. 30-year. Here's a 30-year. 30-year broke is in the process of breaking out. What the heck is going on? You know how many people are looking at this right now? If I looked up ES right now, I bet you this thing is ripping. Well, at least it's green guppies. This just shows you how the structure of the legacy or the equities market is just technically exhausted. It's tapped out, man. It's that ascending triangle that Sven shows all too often. Um, it's overinflated, and this is extraordinary right here. Igor, you pointing this out, man? That's a big deal. Big deal. Craig, BNB is getting ready to have a downward momentum shift in the 4 hour. You goddamn right, bro. Craig is technical. Look at this thing. Craig, you might not have been here. I showed BNB earlier on, and this thing looks like it's ready to tank. If this breaks this purple line, that's going to be brutal just getting to that purple line. If it breaks this purple line, it's going to this purple line. That's going to be brutal. If it breaks this purple line, bam, that's just going to be brutal. And if it breaks that, you're just going to do a full mean regression of the hourly, and you just lost like 40-50% of your money. So I just, I see all this FOMO and pancake swap, and I'm like, okay. I literally didn't even flinch for a second. It didn't even catch my attention for a second. I think I yawned. Definitely laughed because I knew exactly the market that was going to respond to it. I knew that the charts were going to be vertical, and I knew that what goes vertical goes straight up, comes straight down, because participants like that can't handle a 10% depreciative cycle. It causes a depreciative cascade. If this breaks any of these resistances, supports, the cascade is just going to keep going. And how do we know it's going to keep going? Because it's going to do exactly what Doge did. Because boom, it just breaks and breaks and it keeps on breaking. And if you want to see the most painful chart in the world for breaking morale and your soul down to the ground, just look at XRP, because that will literally, you might, if you never held XRP, you're still gonna feel horrible. That's how bad the chart is. It's just gonna take your soul out and chew on it. No idea about GRT. I don't have much interest in it. Interesting project though. No, I missed out on a position in Rook. Should have listened when I had the chance. Rook was extraordinary. My position was like at $65. I wrote it to like 800. I'm just saying, that's crazy. Crazy. Matt, hooking it up, much appreciated. Crypto Chick, I hope I help. And I know it's very detailed and sophisticated, but shit, I think this is my 200 something video, my 200th stream. So I'll keep doing these. Ask questions, and you got to figure this stuff out, because as I've said, we all have just one shot at winning and doing it right. Sir, can you please advise on undervalued token? I'm a small investor only, but I am new. Sub. I am JD2281. You, you need to understand risk. So you can't, there's no such thing as an undervalued token, because honestly, if you want to understand what's undervalued, it's kind of this chart. And I know I'm showing you a technical chart, but I'm sorry, this is not a channel like that. The entire crypto space is undervalued right now. That's the best answer I can give you to your question, JD2281. Based on this chart, let's go to the weekly. I should actually drop to the monthly. Based on this chart, the whole crypto space is undervalued. In 2013 to 2017, Bitcoin inflated 833% versus NASDAQ. 2017 compared to now. Bitcoin inflated. No, if you apply the same inflation, 2013 to 2017 to 2017 to now, Bitcoin has 79.88% more NASDAQ, denominated in NASDAQ, of course, to go. Now, Craig might appreciate this chart, a technical chart. So, value of NASDAQ, 78% more to go. In fact, it's up, so it's less. But the point is, it's different this time. You have to factor in Willy Woo and other serious macro metrics, and I don't think. But this is an interesting piece of technical information. So there's your answer. The whole crypto space is undervalued. Would be wise to establish a trust to hold these digital assets. Oh, you could do that. If you're trading on KYC exchanges, they're going to give you 1099s, and you have to file those with the IRS, and you have to pay your taxes. That's what you have to do, and that's what I will say to that topic. Every 1099 that you get, you have to file, you have to report, you have to pay your taxes. Let's put it this way: the government knows exactly how much you owe them. You have to file every 1099, and you have to pay them exactly how much the government knows you owe. And that's all I will say on the topic. So instead of selling to avoid losses, cash the top, we can take LP positions to minimize risks. Whoa! That's Matt? Yeah! So instead of selling to avoid losses or catch the top, we can take LP positions to minimize risk. Okay, so that's all I do. I have no interest in a 10x. I have no interest whatsoever in a 100x at all. I do not want the moon. When I hear folks say the moon, I don't even flinch. I'm like, okay. I want my value to appreciate and grow as the market inflates, which is why I value so much the LP positions. It protects against the downside, it caps the upside, it capitalizes on volatility, and it exposes you to two assets. So Bancor is another story. Bancor allows single-sided exposure, and that is a major, major, new, unique factor to consider for your portfolio. Single-sided exposure will give you full appreciation, full downside, but also capitalize on the volatility. So that definitely has a place in the portfolio, especially mine. I got so many comments. I'm happy I'm helping. Would be wise to set the trust. I will vote for Rook on BNT. You got it. So instead of selling, I got you, Matt. Okay. Oh, this was a while ago. Can't see the charts. No, but they're back up now. This was a while ago. What do you think of Wyoming chartering SPDI crypto banks? Wyoming is just a start. Brian Brooks pushed it out nationwide. This is just the beginning. We have no idea what's going to happen. We could have a liquidity event. The reflation narrative could play out over the coming weeks, and everything just explodes, and stimulus, another 2 trill, and then the Democrats want to throw in another 3 trill for infrastructure, and we could see just rampant asset price inflation. And over the coming years, we're going to see a CBDC. We got to understand what the IMF has in mind and all those big bankers around the world. We got to understand what China's doing with the digital yuan, because they're going to put serious pressure on the rest of the planet, and to at least forcing them to do radical things to keep up with what they're doing, because China is in a position, or at least is positioning, to be able to deploy unlimited central bank digital currency around the planet. That's what they want to do. That is literally what they're doing. How do you compete against that? My speculation in brevity is that the U.S. will full on adopt open source systems and do, grassroots, Silicon Valley, hippie type shit, democracy, and go that route. I'm just speculating. Maybe the U.S. will head totalitarian, break down the banking rules and regulations, go CBDC, kind of bypass the banks with the U.S. CBDC, give everyone a Fed account, and give you direct deposits into a Fed account, which basically means what the hell do you have a bank account with HSBC for? So it's pretty interesting. All right, ladies and gentlemen, I went over on time. Thank you very much. This was a big, big stream today. I covered a lot. I know I speak a certain way, but my goal is to inform you, to help you. I provide financial advice. I will never tell you what to buy, but I will teach you how to think about managing value, how to protect your value, and how to allocate value strategically, such that it grows over time. You minimize risk. So that is meaningful. I will never tell you guys what to buy, but I will tell you guys how to think and teach you guys, just like a damn college course or some shit like that. 29 people in the stream, 18 likes. We can do better. Friday, 12:17 p.m., February 19th. As always, I thank you very much for joining. I wish you all a wonderful weekend. I will catch you on Monday. I will see you then. Peace.